Welcome back guys. In today's session we are going to discuss about GST, Goods and Services Tax. Okay, GST is said to be the most revolutionary tax reforms that is being undertaken since independence. It is going to replace all major indirect taxes applicable in our country. Before discussing GST, let us understand the present tax system applicable in India. In India, the taxes can be divided into two broad categories. The first one is direct tax and the second one is indirect tax. Okay, the direct taxes are taxed imposed on income or profits of a person. It should be paid directly to the government. And for example, income tax. Okay, if there is any liability of income tax on any person, he has to pay directly to the government. Then come to the second point, indirect taxes. Indirect taxes on the other hand are imposed on goods and services are paid indirectly to the government via third person. Okay, for example, service taxes. When you go and dine out in a restaurant, you pay service tax which is included in the bill to the owner of the restaurant. The restaurant owner pays a service tax portion to the government. In this way, you pay the tax to the government via third person. So it is indirect taxes. Okay, in our country, indirect taxes are levied by the central government as well as state government also. Okay, some major indirect taxes by the central governments are as follows. First is excise duty. It should be charged on goods manufactured in India. And the second one is service taxes. It is charged on provision of any services. Third one is CST, cessed. It should be charged on interstate sale when the goods are sold to another state. Then the last is customs duty. It should be charged or levied on the import and export of goods. Some major indirect taxes levied by the state governments are as follows. The first one is value added tax, that is VAT. VAT which deals with, or it should be charged on the sales within the state. Okay, then second one is entertainment tax. Entertainment tax are the tax should be charged on the entertainment activities such as movie tickets, etc. And next one is the luxury tax. Luxury tax which deals with the luxury hotel rooms, etc. Then the fourth one is octroi or entry tax. It should be charged on the transfer of goods from one state to another. Tax to entry to a state, that is octroi or entry tax. Before going to discuss what is GST, just examine the history of GST. We all think that on July 1st, 2017, a tax is called GST suddenly came to us. But not so. During the Vajpayee's tenure as a Prime Minister in 2000, the first draft of the GST law was drafted under his leadership. In 2004, a task force concludes GST must be implemented to improve the current tax structure. And next, 2006, Finance Minister proposes the GST introduction from April 1-10. In 2007, CST to be phased out, rates reduced from 4 to 3%. In 2008, EC finalization dual GST structure to have separate levy legislations. In 2010, project to computerize commercial taxes launched but GST implementation postponed. But in 2011, Constitution Amendment Bill to enable GST law introduced. In 2012, the Standing Committee begins the discussion on GST but stalled it over Clause 279B. In year 2013, Standing Committee tables its reports GST. In 2014, GST bill reintroduced in Parliament by the Finance Minister. In 2015, the GST bill passed in Lok Sabha but not passed in Rajya Sabha. GST in 2016, GSTIN goes live. In 2016 also the amended model GST law passed in both houses. President gives assent. Then 2017, the 4th supplementary GST bill passed in Lok Sabha and approved by the cabinet. And Rajya Sabha passed 4 supplementary GST bills. Final GST implemented on 1st July 2017. Okay, the GST launched on 1st July 2017. Okay, then now let us see What is GST? As the name suggests, it is an indirect taxes levied on goods and services. It is clear that GST is an indirect tax and it is not going to have any impact on the rates or structure of the direct taxes, which means income tax rates will be the same. The reason it will be a game changer is implemented because it will replace major indirect taxes that are levied on central and state. It will be replaced. The Goods and Services Tax Act was passed in the Parliament on 29th March 2017 and came into effect on 1st July 2017. We have already discussed about that in the history of the GST. Okay, then move on to the advantages of GST or some benefits of GST. Economics says the new system could add at least 2% to India's GDP and help keep India's economy moving. Some major benefits are it will replace all major indirect taxes. We have already discussed about that. It will make replaces all indirect taxes such as levied by the central and the state government. And also the next point is it remove cascading effect. Cascading effect is a situation when taxes are imposed on previously charged tax. In simple words, it means tax on tax. Here is an example. If the manufacturing of a product of that is biscuit, the cost of such product is 100 and the tax, that is excise duty, is applicable as rupees 10. So the total amount 110. The manufacturer will sold that product to the wholesaler at rupees 110 and he received at rupees 110 including the excise duty 10 and the cost is 100. In the hand of wholesaler, he should resell it to the retailer at rupees of 110 plus tax, value added tax plus a profit of 10 rupees, so total 20 rupees. So the total amount is 130 to the retailer. The retailer should buy this for 130 and then he should also add a VAT and profit of rupees 25. The total amount becomes rupees 155. So the customer is buying this for rupees 155. So customer has to bear this additional burden. This is called cascading effect. Okay. Then the GST will remove the cascading effect as there will be a single tax applicable. Okay, then move to next point. It will reduce the flow of black money. Okay, black money is the money which is which the tax is not paid to the government. Indirect taxes are more able to furnish underreporting of their incomes. GST is a single tax from supply of goods and services right from manufacturer to the customer. It came into force. It should be helped to avoid or reduce the black money transactions also. And the next point, One India, One Market. GST will facilitate Make in India by make it one India and one market. Okay, there are dozens of taxes present under a common market and the GST will impose a single tax all over country into the production and sales and services. So it should be a seamless flow of goods across the nation. And the last point is ease of doing business in India. This point which means that in the current tax structure, the businessman has to pay different kinds of taxes different kinds of taxes to the different department, but after implementing the GST, his work is more easier than the all because he has to file only one tax for one department. So there is lot of time to spend their energy and also to business more. Okay, then just move to the components of GST. Okay, there are three components mentioned here. The first one is CGST, Central Goods and Service Tax. It should be for the central government levied taxes such as excise duty. That's central government. It should be included in the central government taxes except the customs duty. And this SGST means State Goods and Services Tax, which is levied by the state government. That is, then IGST, Integrated Goods and Services Tax, it should be dealt with the interstate purchase or interstate sales cases. Okay, if we are going to purchase without the country, and in the case of CGST and SGST, it should be included in the within the state, intrastate supply of goods and services. Okay, then here is a box which gives that the old regime and new regime of the tax details. Sales within the state in new regime, according to the new regime, is CGST plus SGST, but old regime VAT plus central excise or service taxes. Okay, here the revenue distribution will be shared equally between the center and the state. Okay, sales to another state, here only applicable is IGST, but in old regime it's central sales tax plus excise service taxes. There will only be one type of tax, central, in case of interstate sales. The center will then share the IGST revenue based on goods destinations. Okay, then come to an important point, the rates of GST. Here there are four main tax slab rates for GST. They are 5%, 12%, 18% and 28%. The essential items like grains, foods, etc. would be 0% GST is applicable. 5% GST is applicable for the commonly used items, and the 12 and 18% will be two standard rates, and the highest 28% will be applicable on the luxury items like luxury hotel rooms, etc. Okay, then come to who is eligible to register under GST. Okay, which persons are eligible for registering under GST? All the businesses supplying goods whose turnover exceeds rupees 40 lakh in a financial year are required to register as a normal taxable person. But in the case of the business having in northeastern states or Jammu Kashmir, Himachal Pradesh and Uttarakhand have a threshold limit is 10 lakh rupees. If the amount exceeds rupees 10 lakh, he has liable for applying GST or registering GST. And also the turnover limit is rupees 20 lakh in case of special category states is 10 lakhs for the service providers. Also, here is a list of the certain business for which GST registration is mandatory irrespective of their turnover. Okay, here says that before that the turnover matter is not mandatory here, but these following cases are listed. It's mandatory to register under GST. The first one is casual taxable person or input service distributor, and the non-resident taxable person, interstate supplier of goods and services, supplier for goods through an economic e-commerce portal, any service provider, TDS, TCS detector, online data access or retrieval services provider, etc. Okay, just we conclude that the impact on GST in our country is more, because generally the tax rate is 20 to 23rd itself, but now it's become the cost of goods should be down and the services rates could be high. Okay, then conclude. Everyone should be know about what is GST. Just thank you.